First of all, if your books are not in order, get your books in order. Otherwise, it will take more time and more money.
It is time for the second episode in Katrina's bonus series with us. If you missed her first show, don't worry, I'll drop it in the episode description because she talks about all the things we need to know as a business owner. And as I started last time, the tax code isn't fair, but that's your opportunity as a business owner. And we're bringing on a rock star business owner again today. Katrina, it's great to see you again, and welcome back to That Entrepreneur Show.
Thank you for welcoming me back. I always love joining. It's so fun. I love talking
Um,
about taxes.
yes, well, thank you for the kind words. And everyone, you hear that passion through the mic today, whether you're tuning in or you're checking out some clips and reels. She has the passion backed by the expertise and the personal experience, right? She got herself out of a financial hole, found herself working with the wealthiest individuals, right? The top 2%, because she was ready to learn and, of course, add value. With those experiences, you're getting a free masterclass today with her. So, everyone, thank you so much for joining us once again right here on That Entrepreneur Show. My name is Vincent A. Lancy, and we're brought to you by Coming Alive Podcast Production.com. As I teased, it's all thing taxes, and we're launching the second episode a little quickly after the last because we're in a time of urgency, right? There are a lot of things we need to do to be prepared, and we don't want to wait too late because then we file extensions, then we have fees, and all those things we're going to avoid here. So, Katrina, before we dive into another amazing tip, right? Last time we talked about the benefits and how to use family and businesses, how to use your vehicle, right, for getting tax write-offs. And today we're going to do a lot more. But first, please briefly introduce yourself before we dive on in.
Thank you, Vincent. So, Vincent gave you a little bit of information about me, and that's why I'm passionate because as an entrepreneur, I know that we have ebbs and flows, we have ups and downs, but we need to use the tools such as tax strategies and the tax code to benefit us. And that was one way that I really helped pay off my debt. I learned tax strategies and a couple I'm going to tell you about today. So I'm going to tease you a little bit. And it was really great just working with entrepreneurs all the time because this information has been kept by the wealthiest and it hasn't been shared. So now, I don't know if you've heard the saying, if you don't have a seat at the table, bring a folding chair. So make your way into, to learn this information. So I'm glad you're here.
Oh, we're going to dive into these tips she's talking about. Again, everyone, you don't want to miss those two from last show. I teased what they are, but be sure to hop back in. We get right to the point each week here on That Entrepreneur Show, and that's why we're doing the same today. She said she's got tips for us. Where do you want to start with this next tip?
Let's start with the home office. There are so many people that are scared to take the home office because they think they're going to be audited. That is so untrue. And if you are audited, if you have a good tax strategist, they're going to get you out of the audit. For instance, I had a client that was audited, and after the audit, he got money back because I had the documentation. The auditor was like, everything is in line. So that's another tip, sidebar. If you are audited, make sure that you have all of your documentation in order because if you go in unorganized, they're going to dig deeper. But if you go in with code sections, you go in with your proof, it is going to be an easier audit. And that's what I do with my tax strategies. I work with clients and we have a program where we do tax strategies and everything is documented, all the code sections, because I look good in orange, but not in a jumpsuit. So I'm not trying to go to jail either. So everything is legal and we give you the tax code. Now, home office. If you have a home office, there are many things you can deduct. Your electricity, maybe your water if your bathroom is connected to your office. You can deduct cleaning, security services, just so much. And what you do depends on how you are formed. And we talked about entity structure and the importance of that. All entities do not deduct home offices the same way. An S Corp, as an owner, you do a reimbursement. A C Corp, The C Corp pays you as the owner of the house rent, and then you have to record that on a Schedule E. For a sole proprietor, it's a different way. So you have to understand your strategy based on your entity structure. So that's very important. But with the home office, you have your mortgage, you have your real estate taxes. And a lot of states, if you are paying state taxes, you're going to be limited very heavily on your real estate tax deduction because there's a $10,000 limit and it's increasing. Yes. It was formed when there was a majors, I believe it's a major golf tournament, and it was in Augusta. And people started renting out their homes. In order to make it a deduction, there was some rules passed, and now you can rent your home from yourself for 14 days or less and pay a reasonable rent to yourself. So I had a client, she did a vision board 3-day retreat with her staff. All of it was a deduction. She paid herself from her business $1,000 a day because what you do is you look for how much a house that's similar would cost. Go to Airbnb. There's also websites that show how much it will cost to rent like a full day space, like in a hotel. Use that. Then she also deducted the food. She had drinks. She had entertainment. So all of that is included in that Augusta rule deduction. So I love using the Augusta rule and then the home office. So you can't use both. So you have to decide which one is going to benefit you more. Using that Augusta rule where you're paying yourself, so you can do up to 14 days. So if she had a vision day, board day every month, she could have done that. And that's a deduction for her business. The benefit, she does not have to report that as income. So that's just a deduction on your business, no income to you as the owner. While we're
Whoa.
talking about some of those types of things, holiday just passed. So you missed this tip, but there's still time for next year. I had a business meeting for the holidays. I have a board of directors who are my husband and my family members. We convened over Thanksgiving and we had a board meeting. So what did we had? We had all the Thanksgiving dinner. We had all of that. That was a deduction. The space that we had was a deduction because now as an S Corp and as a C Corp, you are required to have annual meetings. So that annual meeting could be anywhere. So we went to Broken Bow, Oklahoma, got a cabin. Oh, now that's a deduction. The flight there, that's a deduction, or the drive there. So you start to look at how you can move your business life, your personal life into your business and take those as deductions. But you have to have at least a 4-hour business day. That's what's most important. You can't just have a 30-minute meeting and say this whole trip is a deduction. It has to be 4 hours a day that you're spending doing business activity or meeting. The good thing about that, the drive or the flight is counted in that 4-hour day. So if it takes you 4 hours to go from your house to the airport and then fly, that 4 hours has been met. Then the next day you have a 4-hour meeting. Saturday and Sunday is non-business day. So you don't have to have any type of meeting and it's still a deduction. Then that Monday, if you're traveling 4 hours, that's your business day again. So now you've turned a 5-day trip. It's not a vacation. I said a trip. It's a business meeting, but now it's a deduction. So I love using those type of tax strategies, and that's what the wealthy do.
Whoa, did we just get a wealth of knowledge there? Be sure to stick around to the end of the show because you need to know how to get in touch with her. She's got an amazing website with a lot of resources on there. I've checked it out, so be prepared for that. And we're not going to dive too far off topic, but last show we talked a lot about S Corp, LLC. You brought up sole proprietorship, right? Let's just, if we can, share what that is for everyone who doesn't understand what the terms are, as you are very big on clarity.
Okay. Sole proprietorship, that's the easiest form of entity structure when you're starting a business. You can go out today and say, I have a business. You are a sole proprietorship. It could be under your tax ID, your social security number, or you can get an EIN. So you can start without anything. You're just saying, I am going out and I'm starting a business under your name. A lot of people will get a DBA, which is doing business as. So although your name is Vincent, you're going to go out and just get a DBA at the state. So this is at the state level to say, I am doing business as whatever fictitious name you want. That's a sole proprietorship. You have no protection though. So I'm very big on entity structure, which provides you more protection for your business. As a sole proprietorship, you do not. As a general partnership, you have no protection either. You're general. So you and somebody else, you and a friend say, I want to start a business. And you say, let's start. Well, you're a general partnership. You have no protection. That's where the LLC comes in. As a LLC, because it's state level, you have asset protection. LLC stands for limited liability. That's why that's important. So as a LLC, you can be a sole proprietor as far as filing. So that's the filing status. Sole proprietorship is how you file with the IRS, and it's the simplest form.
Thank you so much for that clarity, everyone. It's so important to know the distinctions because what is working for some may not be the right decision for others. We've heard a lot of great tips so far, and now I'm excited because we're getting into tip four. Where do we want to go from here? We started with the families, the cars. Now we did the home office. What's next in this line?
Let's talk about, and this is what I teased you about, retirement. When I started my business, I had a retirement. I began doing retirement planning and retirement funding as an owner. I knew that was important. I lost a major client that was providing 80% of my business. Overnight, I lost six figures in revenue. And I continued working, but I had a large debt over $100,000. But because I had retirement, I could borrow against that money. So let's talk about retirement. I'm going to give you a specific case study. I have a client and he had no retirement. So with his S Corp, he would have had a profit of $280,000. So net after all of his expenses. He would have paid taxes on that $208,000. So just say he's in the 30% bracket. That could have been like 60,000, dollars. After we planned, he was able to take $55,000 in a deduction for retirement. So that's like the IRS is letting you fund your own retirement. As a business owner, it's important. You may be thinking, I don't have money right now. I'm going to wait. Well, if you wait, you've delayed because you've missed out on cash flow. You've missed out on how money grows. And so it's important now, even if you can't do the full 55,000, do something. It's so important to do something. And it's a deduction against your income in your business. How this retirement works, we did 23,000 in deferred. So you are allowed to defer from your income 23,000. So that was non-taxable first of all. So he had a W-2, then he deferred 23,000. So that wasn't taxed. Then as a business owner, he was able to do 22,000, which was profit on your business. So you can have a profit part on your business where you do profit sharing. That's a deduction. So instead of saying, I'm going to just take this 22,000 as deferred money and as a draw, he took that 22,000. It now became a deduction because a draw is not a deduction. So know the difference between when you just take money out of your business, it's not a deduction, okay? Wages are a deduction. And how we did it and structured it, 22,000 was now deduction because it went into his retirement account. But you still control that money. You can borrow against your retirement if you set it up right. You're the business owner. You can set up whatever criteria you want in your 401k. Well, caveat, not whatever, but you can have a Roth RA, which I love. So if you are under 60, get a Roth. Have some form of Roth because it grows tax free. That means if you're 25 and you put $50,000 in right now, when you get to retire, that money, all of that gain is tax free. That's just money that you can get free without paying any taxes. A lot of people will do 401k and they won't do Roth. It's just traditional monies that they've put. What happens is it's not taxed now, but when you pull it out, it would be taxed. And some people have a philosophy, I'm going to be make less money when I retire. Most of the entrepreneurs I know, that's not their goal. Their goal is not to make less when they retire, but to have systems and processes or to sell their business where they're going to have more when they retire. Plus, we don't know what the tax rates are going to be. I mean, we're really in one of the lowest tax rates that we've been in. So paying that tax now may be better. At one point, we were like 76% tax. I mean, I couldn't even believe, I mean, I didn't live during that time, but I can't even believe that that happened. Why would you work? I mean, you're just working to give it to the IRS. But so you don't know what the tax rates are going to be. So if you're young, you have time for that money to grow. This year, S&P grew 19%. So just imagine 19% growth year after year and that money's compounding. It's just, it makes sense to invest in yourself now and invest in retirement vehicle. Again, it's a tax deduction. Let the IRS fund your retirement. I love that.
I love that slogan there, right? Where a scary tax season, hey, there might be some sunshine in all of this. And we still got a few minutes. So before I get your contact info, say there's someone who unintentionally dropped the ball on tax prep. They've never actually used an accountant. They've been doing it themselves or QuickBooks, whatever. They're recognizing it's time. What are some things that they should do, they need prepared prior to working with a professional?
First of all, if your books are not in order, get your books in order. Otherwise, it will take more time and more money. If you go to like a tax specialist like me, I'm going to charge more than a bookkeeper, but find a bookkeeper who understands your industry so they know what type of transactions that you have. One thing that I find is you don't know what to give the bookkeeper if you don't know it's a deduction, just like we talked about the family having a family business trip. You don't know that you need to give that bookkeeper that type of expense because you don't know it's a deduction. That's why it's good to talk with the tax strategist ahead of time. But if you haven't, just make sure your books are in order, you have great receipts, and you find someone that is in your industry and has the knowledge. That's so important. A lot of people giving information now. One of them is ChatGPT. So you can't always trust ChatGPT. I used ChatGPT for a strategy. It missed $40,000 and you know it hallucinates. And so I said, Chat, what about this? Oh, you're absolutely right, Katrina. Let me dig deeper. So it's not the preferred method.
Yeah.
Find someone that's really good. And I say that even if you can just have a one-time tax strategy call, that's good. You may not be in the business revenue at this time to find someone that you're working with every month or quarterly. But if you could have a one-time call, a strategy, I think that will put you in good footing.
Amazing advice. I'm so glad I asked that question. It just came up because there may just be some people tuning in who are seeing the value you're providing and thinking, oh, wait, what if I'm not there? I mean, even when I first switched over to an accountant, I had my bank statements. I'm making an Excel spreadsheet with each line item, and 90% of them were useless and irrelevant as far as the tax return was concerned. But oh my goodness. I mean, everyone, remember the first episode she joined us with in this 10-part series? We talked about families, we talked about card, right? All these tax benefits. Now, today, we really opened up a few great brainstorming ideas, right? I hope all you entrepreneurs are thinking right now how to get creative, right? You may have some more tax questions. So let me ask Katrina, before your next show, if they've got a question or two, where can they ask you?
You can actually go to my website, Katrina M. Craft, and that's CATRINA MCRAFT. So I'm two C's.com. And I'll be happy to answer questions. And I am on other platforms where I always give information because I love giving information.
And you could see that throughout the show. I'm so glad that we were able to become connected and collaborate on this amazing, again, 10-part series. We're going to take you all the way through tax season, right? We're going to be dropping tips and gems along the way. And I hope they signal to you that, hey, having a professional may lessen your chance of being audited, doing something incorrectly on accident, right? I always share in life, everybody's good at a handful of things. We've got a few strong skills. If accounting's not one of yours, outsourcing may be the way to go. We provided a great resource today. Again, this is Katrina Kraft with two C's, KatrinaMCraft.com. Go check out all she has to offer. And please remember to subscribe to stay current so you don't miss her next show. And please share the episode with someone else that you think would find value in preparing for tax season. My name is Vincent A. Lancy, and we're brought to you today by ComingAlivePodcastProduction.com. And with that, we're signing off, and we will see you again in a few weeks with episode 3 in this bonus series with all things Katrina. Thank you so much for stopping by again.
Thank you.
Thank you for tuning in to another episode. I would love to hear your feedback. What did you love? What do you want to see more of? Are there any questions you would like me to ask the guests who come on the show? This show is not possible without you, the amazing listeners, so please email us at podcastsbylancy@gmail.com and let us know what you think. We'll also feature you on a later show. Please remember to subscribe to stay current with our amazing community of guests who will continue to come on the show, sprinkled in with solo episodes from me, Vincent A. Lancy. With that, I look forward to introducing more shows to you each and every week. And with that, we're signing off today. Enjoy the episodes and make it a great day ahead.